Hello and welcome to Explain the Charts. Today, June 10th, 2025, we're taking a close look at USDCAD, analyzing the latest news and what the charts are telling us. Recent headlines suggest USDCAD is trading sideways, influenced by factors like oil prices and US-China trade negotiations. We'll break down key price levels, potential reversals, and what to watch for in the short and long term. First, let's recap the news. FX Street reports the Canadian dollar is pulling back amid a firmer USD, but remains near year-to-date highs. Oil prices are supporting the CD. We also have Bank of Canada set to continue easing interest rates through 2025, faster than the federal Trump's return to the White House will cause uncertainty as well. Now, let's switch to the daily chart and analyze the price action. Looking at the one-day chart, we see a lot of choppiness, indicative of the sideways trading mentioned in the news. From the start of the year, we've seen some major corrections down, but overall, USDCAD has largely traded within a range, failing to establish a strong uptrend or downtrend. Let's zoom in on the more recent price action from April 2025 onwards. We can identify a potential resistance level around 1.475, where price previously failed to break through. On the downside, support seems to be forming around the 1.37 area. It's tested that area multiple times without breaking through. Now, let's examine the 1-hour chart for a more granular view. Here on the 1-hour chart, the sideways action becomes even more pronounced. We see smaller ranges and more frequent reversals. This suggests that intraday trading strategies might be more suitable in the current environment. This heightened volatility can be attributed to the ongoing discussions between Trump and Jinping as reported in the news. For a very short-term perspective, let's look at the 15-minute chart and focus on the last few days. On the 15-minute chart, we can see some consolidation happening, with the price hovering between 1.367 and 1.370. This suggests a short-term trading opportunity might be possible within that tight range, but with caution due to the overarching sideways movement. So, what are some scenarios to consider? A bullish outlook would require a decisive break above 1.375, potentially fueled by positive news regarding US-China trade talks. Conversely, a bearish scenario would unfold if the price breaks below 1.365, possibly triggered by the Bank of Canada adopting a more aggressive rate-cutting stance. In summary, the key levels to watch are 1.375 as resistance and 1.365 as support. Keep an eye on upcoming economic data releases, especially US CPI figures and Bank of Canada announcements, as they will likely be catalysts for the next big move. For now, trading within the established range seems like the most prudent approach. That's all for today's analysis on Explain the Charts. Happy trading!